Hello guys, there are many ways to generate passive income like creating music, renting apartments, blogging, etc. But all of them need you to put some effort into it. Selling music needs you to create it from scratch. Renting apartments needs you to find people who will rent them as well as maintain the apartment. Blogging needs you to continuously post content. But there is a type of passive income that needs close to zero effort from your side, and that is dividends. All you need to do is look at your portfolio once or twice a month and it will generate you monthly or quarterly cash flow. If you really want to kickstart your dividend journey, we have come up with 3 ETFs that are considered best for dividends. All of these 3 ETFs have two things in common. They pay good dividend and they have high growth in the past 10 years. So let's start with the first one. The first on our today's list is Schwab's US Dividend Equity ETF. Its ticker symbol is SCHD. Currently it is trading at $69, and if we look here at the price range, we can see that it is now close to its 52-week low. It is definitely a cheap buy right now. It has assets worth $35 billion. The expense ratio is 0.06%, which is so small that it will hardly have any effect on your returns. This ETF pays quarterly dividends and the annual dividend combined is $2.48. The dividend yield is 3.65%. It is very hard to find stocks or ETFs that have a dividend yield above 3%. So this definitely is a good buy. The 10-year returns for this ETF is 139%. And if we see this chart, look at how the value has been constantly increasing over the years. Now let's have a look at the dividend trend. This ETF has been paying dividends continuously, and the most important point here is that the dividends are increasing year after year. So along with the growth in its market price, there is also a growth in its dividends. Let's check the top stocks and sectors this ETF has invested in. This ETF has holdings in 103 stocks. If we look at the average returns over the past years, it will blow your mind. It has an average return of 12.11% for the last 10 years. So if you had invested money in this ETF 10 years ago, the amount will have tripled by now. If we look at the top sectors, then the top spot is taken by financial sector with 20.8% weightage in the portfolio. Financial sector is followed by the information technology sector, which has a similar value of 20.4%. Speaking of the top holdings by stocks, we have Merck, Amgen, PepsiCo, etc. All the big companies, and they have almost similar percentage of holdings. So it is well diversified, and if one of the companies does not perform well in the future, it won't have a major effect on this ETF. The second ETF is called as Vanguard High Dividend Yield ETF. It has a ticker symbol of VYM. It is currently trading at $99 and is close to its 52-week low. It has an expense ratio of 0.06%. They provide quarterly dividends. The annual dividend amount paid by VYM is $3.22 and the dividend yield is 3.24%. It has assets worth of $53 billion. If we look at the 10-year returns, then this ETF provides a return of 96%, and the chart showcases that it has been continuously increasing in value. Now let's have a look at the dividend history of this ETF. We can see that it has steady and increasing dividends in the last 10 years without any cuts. This ETF comprises of 443 stocks, which is quite high. It means that this ETF is diversified on a very high level. The P/E ratio of all the stocks combined is 12.7 and the return on equity is 15.2%. The top sectors this ETF invests in its fund are financials, which have a 19.9% weightage, healthcare, which holds 15.3%, followed by consumer staples, which has a 13.1% weightage. The top companies in the holdings are Johnson & Johnson, ExxonMobil, JP Morgan, EG, Home Depot, Chevron. Johnson & Johnson is the most heavily invested stock with a fund percent of 3.44. The third ETF we are going to talk about is called Vanguard Dividend Appreciation ETF. Its ticker symbol is VIG. It is currently trading at $139. According to the 52-week range, currently it is very close to the 52-week low. So it surely is a good time to buy this ETF. This ETF has $67 billion in assets. The expense ratio is a measly 0.06%. This ETF pays quarterly dividends. The annual dividend payment is $2.88 and the dividend yield is 2.06%, which is a bit low. But this is matched with a high growth rate of 134% in the last 10 years. Let's take a look at dividend track record for VIG. It has never missed a single dividend payment in the last 10 years, and the dividends have been growing in value continuously. This is a necessary condition for building a dividend portfolio, and this stock will surely be a part of such a portfolio. This ETF is a combination of 289 different stocks. The combined P/E ratio is 18.5%. The return on equity is 24.4%, which is a very good value. If we look into the top sectors the stock has invested in, then the first is information technology, which has 22.6% of the weightage. Then comes healthcare with 16% and financial sector with 14.8%. These three sectors combined together add up to 50% of the portfolio. The top holdings include United Health Group, Johnson & Johnson, Microsoft, JP Morgan, PG, all big companies that have stable foundations. So these were the 3 ETFs that have been currently trading at a very low price, and they pay good dividend and have a record of good growth in past 10 years. Thanks a lot for watching this video. Do like and subscribe to show your support. We'll keep making more videos on earning, saving and investing money. One stop to all your money problems. See you in the next video.